Good morning, folks. Welcome to Money Me. My name is Pat Dees. I do appreciate you guys taking the time and watch my video. I'm going to keep this short today, probably about 10 or 12 minutes. And hey, if you guys could do me a favor, hit the thumbs up and subscribe to the channel. Greatly would appreciate it. Here's a video I posted February the 9th, 2021. It's funny because I put this shirt on, but it's not the same shirt. It's maybe close to the same pattern, but it's a different shirt from last year. But anyways, Roku. Roku is down huge. It was down almost $11 yesterday. It is down 30. Let's pull up the Weeble desktop app. It is down $36.20, 25%. And this stock has been a thorn in my side since last year. It says here, lost over $8,000. I wound up losing $9,200 on this stock last year. And all because I went short it. I had puts in it. I mean, that don't even, $9,200. I probably lost, honestly, probably lost close to $11,000 with the several times that I tried to recoup money and buy puts into the stock. And, analysts were coming out, buy it at 400, buy it here, and it was funny because I mean, even look at these comments. Like one person is like, dude, don't bother. They don't make streaming boxes, dude. Their platforms, it's not just a stick. I had a lot of actually comments on this. Dude, please, here's one. BN, dude, please never short Roku. That is exactly like being short Amazon 10, 20 years ago. Go long and you will make your money back, period. I didn't take his advice. And full disclosure, I'm not a licensed broker. I've been doing this for 20 years, but let me tell you, he brought up something about Amazon. I remember when Amazon was a short, and that stock went to $5. Now, Amazon survived. Amazon came back and went from 5 to over 3,000 in the last 20 years. But Amazon also was one of those overinflated stocks that fell down, and luckily they did survive and came back either. But for God's sakes, just look at what people smarter than both of us are doing Roku. AK Fund Management, Growth Fund Management. They are buying. Well, guess what? I lost $9,200 just buying the stock. Probably close to $11,000. Let me tell you, they've lost millions. Billions of dollars have been wiped out in market cap. So the point of this video is don't always listen to the pros, the big analysts and stuff. Do your own homework. My problem is, and I got into this, and I was shorting in the $200 and some range down in here. I mean, here you got a stock. Back in January, I started shorting it. It basically went from 250 to 486. I got out, honestly, I got out around 400, and it was kind of in this area, and I just couldn't take it anymore. And having a margin account, the margin calls, it just was overwhelming. But I'm smiling now, but I'm not financially benefiting from, because I knew I was right. I just thought the market cap was crazy, and for what they're doing compared to companies that I do like, for example, like a Viacom, that the stock was way overpriced. I mean, you got this stock going, basically giving back all of 2 years worth of returns, and I don't know if you want what you want to call this, but this is like a mountain down here. That's in one ugly chart. So I would not. I don't see myself ever touching Roku. I am invested into Fubu, which the market cap for that is under $2 billion, where the market cap for Roku is still at around $20 billion. And I think the growth opportunity in Fubu is much better as far as what they're involved in even gambling and stuff like that. And actually, they would probably be a good acquisition target by another company, but they've gotten hit too. Fubu, they're up. I mean, they peaked at Well, they didn't peak at, they were at 35 in November, but they were at 63 last December 20th, 2020. So the stock was much higher. Unfortunately, we're in one account, two accounts, one account at around $18. So that's pretty much been cut in half. And another account, I think we're in some shares at 18 to 22 is pretty much the range that we're in. But Roku, my problem was as it kept going up, I kept shorting more. I wanted to be vindicated that, and I was trying to bring my average short price down, and it just became, and it's not, you say, well, $9,200, Pat, how could you? That was only short. Well, let me quick do the math here. Calculator at 300. Let's see, 9,200. Let's just say 9,000 divided by 300. It didn't take, well, 30, was it 30 shares? 30 times 300. I don't know why that's not working right. I think approximately I had, without digging into the account, I think at one time I was short roughly 110 shares. It was to the point where it was the majority of one account. But it was devastating to the account because what happened is I sold other positions because I was so steadfast on wanting to short Roku, and I sold some other stocks that ultimately they would have done better too. And I was just, it was to the point that it basically, that account, it really kind of destroyed it because I was short also Apple prior to that, thinking, hey, when everything was shut down, that was the previous year, but Roku was last year and Apple was the previous year, that people wouldn't be buying cell phones, but that theory proved wrong, and Apple has done well. So I was glad I got, I took a smaller loss on Apple, but I was glad I got out of Apple. And but Roku, I was dead on. I mean, I would have I think my average short price was about 327, and I covered near about 409, 412 in that area, and that resulted in like $9,200. I had made a couple dollars on some puts, but then I lost on puts. So, but it was a terrible stock for me last year. Now, hindsight, and that's here we are a year later, and at basically 108.65, and the thumbnail says 400 to 100 because pretty much we're almost right there. We're talking, even at 200, $200. Man, that would have been nice. Yeah, $200. $200. Yeah, it would have been approximately, obviously holding till now, which, let's not go with that theory, but holding till now would have been basically a $22,000 profit. So, I just wanted to put that out there. That's what it goes to show you, that had I held that position, could afford it. The thing that makes me so mad is when I got out of it, no lie, I got out of it in the February range, and I had the chance, because I was out of it, it was too late, but I watched it the next like 4 or 5 weeks just go down, and then it went back up, and I was like, I'm glad I am out, but because here we go again, and son of a gun, here we are, $108.60. I mean, you're talking, instead of not, you're talking roughly a $30,000 swing the other way, and what happens is as that loss, it starts taking away your ability on your account to hold other positions and stuff like that, especially on margin. That's why, margin can be good when stocks are going up, but when they're going down and you got to pony up the money, or they're you're short and they're going up the opposite, then it really can wreak havoc on your account. And boy, do I remember, honestly, going back probably about 20 some year, 25, 26 years ago. Same type of thing happened with Amazon. Amazon, I don't even know how far we can go back in these charts. Let me type in here real quick. This is free on Webull. This is the desktop app. If you guys are interested in, yeah, I don't know how far we can. 25 years. I mean, you'd have to, yeah. 108. I mean, look at this. So 25. Yeah, 1990. I mean, look at this. 114. And then, don't forget, it's been split. But you know, it had bought. I mean, whoa. Look at that. Yep, $5.60. Yeah, so roughly. I mean, you think about that at $118 to $5 and change. That stock at one basically lost 95% of its value in that stock market correction. And there was a lot of companies. I don't know if you remember Webvan, and there was a lot of companies that went out of business. There was some companies that never came back to. And I think we're in that situation now that there are just certain stocks that are never going to come back. That they peaked last year during the crazy pandemic shutdown. And again, there's a lesson to be learned by that. And that's one of the reasons why I like to do these videos, to kind of talk to the average person that now I don't think it's a good time to be investing a big chunk of money. You can still do dollar cost averaging at your 401k at work or your IRA. There are pockets of opportunity that I think are available. If you're a trader, for sure, there are times that, but you got to be very, very careful. I don't see any stocks that really are you going to get in and you're going to there were a lot of stocks. If you got in when everything was shut down, you doubled your money. And some of them you double from that low. Some of them you doubled them in 3 months. Some of them triple, quadrupled. But based on going back to the pre-pandemic, a lot of stocks you would have doubled. And I mean, we got the likes of Tesla that peaked at close to $1,400. Now this is a monthly chart here, but look at this. It's been nothing but red. The monthly chart, nothing but red the last 4 months. Nothing but red. And I do predict the stock market will be down 15% this year. It'll probably be down. Some stocks are way down. Some stocks are down. I think Roku is down now about 67% this year. And I'm saying this year. This is only February. So look where that has gone. So just be careful. And I do appreciate your guys' support. And I'll see you again. And have a good day.